So we are going to the chapter income from salaries. But before I go to income from salaries, I want you to know the total five heads of income. Okay. Before I go to that five heads of income, understand one thing. Please keep your minds open and try to answer. If there is an assessee, okay, whatever income he is going to earn in the previous year, it is going to be charged to tax in the assessment year. Are you with me?
Yeah.
Assessee can be anyone that you know about.
Hmm.
But when I talk about income, that income could be earned by him from any of the sources.
Yes.
When I am saying that income can be earned by him from any of the sources, that means the Roman number one would be his very first source of income. We write income from salary. Before I go to that, we are writing income from salary. We are going to write this format that is there, assessee. You'll write the name of the assessee, whoever it is. After that, you will write what? Residential status.
Hmm.
Okay. After that, you will write residential status. Then you will write what? Previous year.
Hmm.
After that, you will write assessment year. Okay. This is your main statement that you're going to do, which is a statement that is called computation of total income. So when I'm talking about computation of total income, that means I know my income can come from any way, anywhere. Before I write the computation of total income, I write the details that this is related to so and so person, and I make these two columns.
Hmm.
My Roman number one is income from salary. Roman number two is income from business profession. Income from business profession. Roman number three is income from house property. I hope you're with me.
Yes.
Roman number four would be income from other sources.
Hmm.
Then there would be, income from capital gains. Then there would be income from other sources. After you derive all the categories of income, anything that you find for income from salary would be shown in the working note. Income from business or profession again would be shown in the working note. Income from house property in another working note. Income from capital gains in another working note. Income from other sources in another working note. After you add all this, you get something which is called the gross total income. What do you get?
Gross total income.
From that, you are going to minus your deductions under section 80C. Under section 80, you would say. Then you get net income chargeable to tax.
Hmm.
That means the income that an individual is earning can come from five sources, and you need to clearly specify from which source that income is coming. After you add all that, you get gross total income. From that, you will minus certain income which the government says we allow you to remove it. We allow you to reduce your income by that amount if you doing certain investments at some places where we ask you to. Okay? And then you get net income chargeable to tax. That means you have to pay tax on this income. I hope I'm very clear. So we are now dealing with the very first part of computation of total income, which is dealing with our income from salary. Okay? Income from salary is under section 15 to section 17. Okay,
Yeah.
are you with me? So, what does the Income Tax Act say? That whenever you earn certain income, we do not take everything as income, but we allow you to have something removed from that income. We allow you to have some deductions from that income. And when you are doing income from individual heads, the deductions that we are allowing you to minus from your income, it comes under section 10. Are you with
Hmm.
me? Understand, from the gross total income, the deductions that we are allowing you, it is under chapter 80, under section 80C.
Hmm.
But when we are reducing some part of your income under the head, the deductions is under section 10. Are you with me?
Yeah.
So income from salary also has a computation which looks something like this. Before I go to this computation, what is income from salary? They say if you're receiving any amount by your employer from, sorry, by an employee from the employer. That means if I am receiving any amount, I am the employee. If I am receiving any amount, I am the employee and I am receiving this amount from the employer, and the relationship between both of us is an employer employee relationship, then that money, that amount that you receive is charged to tax under the head income from salary. In simple words, if you are receiving any money from a person and that person is the person who has hired you, or that person is your employer, then whatever money you receive from him would be classified under the head income from salary, or I am saying it is chargeable to tax under the head income from salary. Can anybody please re-explain this to me?
The amount that is received by the employee from the employer, which is called the relationship between employer and employee, he shall be chargeable to the tax under the heading of income from salary.
You have to repeat this statement, Zara. Amount received by the employer is chargeable to tax under the head income from salary. Can you repeat both of y'all?
Amount received
Amount received by
employee
employee
by
from employer
employer
shall be
by what
chargeable to tax under the heading income from salary.
Come on, repeat it together, please.
amount received from by the employee from employer shall
Employer shall chargeable to tax under head income from salary.
The language should come to you. So, amount received by the employee from the employer shall be charged to tax under the head income from salary. So, now I am talking about what shall be charged to tax. What shall be charged to tax? They say if the amount is due or received, whatever is earlier would be charged to tax. Say, for example, I have a boss who is supposed to pay me 100,000 for the full year, but he has not yet paid me, and my income tax year, my previous year is already over. I have landed in the assessment year. So the amount was due, right?
Yeah.
But I have not received.
Hmm.
So this amount that was due will be charged to tax. Are you with
Even
me?
if you have not received it.
Even if you've not received. So the chargeability is due or received, whichever is earlier.
And if you have
You
received
have
also, it will
received
be
in
charged.
advance.
Hmm.
Whatever comes earlier, it will be charged to tax only once. But
Okay.
whatever comes earlier,
All right.
which means that if you have received any advance which was not due, I received in this year income for the next year, charged to tax.
Hmm.
Understand? So the
Yeah.
chargeability is due or received, whichever is earlier. So if it's due, he has to pay you, but he has not paid you. You still charges to tax because your
Hmm.
year is getting over. And if you've received it and you've received it earlier, but since you've received it, you put it to, you are going to charge tax on it.
Hmm.
Okay? So you have to
Yes.
remember this advance salary, even if it is not related to the previous year, it is always taxable.
Okay.
Okay? Now, when you're preparing your statement for income from salary, the things would come in this order: basic salary, advance salary, arrears of salary. Okay? Bonus. Bonus is always charged on receipt basis because it is not a part of your contract. Bonus and commission are not part of contract. So they are always charged on receipt basis.
Hmm.
I hope you are with me.
The receipt basis, as in if you received it, then only if you
When
charge it.
received, at that time you put to charge it to tax. At that time you count it as your income.
Hmm.
And commission will be charged to tax only if it is a fixed percentage of the turnover. That means it should be said in your question that commission is fixed percentage of the turnover. So the chargeability to tax, first 5 points let us learn: basic salary, advance
Advance
salary,
salary,
arrears of
arrears of
salary,
salary,
bonus on
bonus,
receipt basis, and commission only if
commission
it
on
is a fixed percentage of
6% of turnover.
turnover or net profit, whatever it is.
Hmm.
Are you with me?
Yes.
Zara,
Yes. Yes.
basic salary, advance salary,
Advance
arrears of
salary,
salary, bonus, commission.
bonus,
Receipt basis,
commission.
commission.
Bonus on receipt basis and commission only if it is a fixed percentage of turnover. Then there are certain allowances which the employer gives the employee.
Hmm.
What is allowances? He gives him some benefits other than the
Hmm.
basic salary. Say he gives him house rent allowance. That means he tells that please buy a house next to the place of rent a house next to the place of employment. I will give you additional allowances. There are many allowances that he gives. I'm just naming one for reference. Say he gives you house rent allowance and he gives you an house rent allowance of 3,000 rupees. Now tell me, shall I treat this as income? Is it right
No.
on the part of the government to treat this as income?
No.
No. Why?
Because
He's
it's not his
receiving the money
income.
from the employer and
But
it is
he's
out of
spending.
employer-employee relationship and the money is received. So should be treated as income.
But it is received for a specific purpose, no?
Salary is also received to service basic living.
But here it is mentioned what purpose.
So now here the government is saying, okay, the Income Tax Act is saying, say your
Hmm.
employer is giving you 3,000. Out of that, you are paying the rent 1,000. I'm just
Hmm.
giving you examples, the provisions, exact provisions I will teach you now. So 2,000 will be charged to tax.
Okay.
I hope you're with me.
Hmm.
Yeah.
The employer is paying the employee, say 3,000, but he's spending only 1,000. So the balance
Yes.
money charged to tax. Say the employer is also giving him entertainment allowance. So once in a month you go and watch movie, go for a
Hmm.
club. He is giving him entertainment allowance. So that entertainment allowance minus from that the government there are exemptions. That means the money spent or whatever provisions. You minus the exemptions and balance amount charged to tax. Can you tell me what would be the purpose of the same?
Purpose of?
Purpose of this allowances minus exemptions balance amount charged to tax.
Because
Understand.
the
Okay, please understand the logic. You will know what is exemption then. I want to hire Afia as my employee. And I tell her I am going to give you 100,000 a month. Okay? 100,000 a month into 12, your per annum salary is 1,200,000.
hmm.
Okay? And Afia has no other income, so this becomes a gross total income.
Okay.
Okay? And then they tell her that if you are going to do your investments at some places, we will give you deductions. So that deductions is 150,000. So the net income that is chargeable to tax is how much? 1050,000.
Hmm.
I hope you're with me.
Yes.
Means
Out of
what was
which
this deduction wala?
वो बाद में बताएंगे. Government gives some deductions to people where they are
Hmm.
trying to tell that if you whatever income you earn, if you are
Uh,
spending a portion of that income on specified government projects, or you're
which
giving donation to someone, or you're
uh,
investing somewhere, then we will allow you to minus it from your income, and your income that is charged to tax would be reduced.
okay.
Okay, so Afia is going to pay tax only on this amount, not this amount. If she does some things,
Hmm.
and from this 10 lakh 50,000, 500,000 is free income. That means you don't have to pay tax on that. The provisions we will discuss later. So Afia needs to pay tax only on 650,000 and say she's going to pay 10% tax, 65,000. Too much.
Hmm.
So Afia is going to tell her employer that, yeah, you give me 100,000, no problem. Okay. But you give me basic
Yes.
salary only 10,000 and remaining you put in allowances. Allowances, that means give me a bifurcation, house rent allowance, entertainment allowance, medical allowance, school fees allowance, tuition fee allowance, and bifurcate everything into 20, 20, 20, 20, and 20. So then tax will be on how much amount?
It depends on how much you use the allowance, no?
Yeah. Now, if the government, okay, they say employer is giving the employee any amount, it is income for the person, tax should be charged. Okay. Like before, you all told me, if any money is given for allowances, it is not income for him because it is given for a specific purpose. Did you all tell me that?
Yeah.
So now the tax will be on the basic salary, that is for sure. But for
Hmm.
this is one thing is there, that yes, it is there for a specific purpose. But the government says we will allow you to take exemptions up to a particular amount. Okay, we will allow you to take exemptions up to a particular amount. As per the law, we will decide the normal rate, and then the remaining amount will be chargeable to tax.
That is depending on how much allowances I'm using, no?
No, 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 not what you're using. The government will give you a limit. We will work on that right now.
Okay.
Okay, so there are certain allowances and there are exemptions on allowances. Okay,
Hmm.
my idea behind teaching you this is, from the allowances, if the government is giving you some deductions, that okay, don't treat it as your income, it is called exemptions. What is it called?
Exemptions.
Exemptions. From your total salary head, if you're going to minus something, that is called deductions under
Hmm.
section. And from your gross total income, if you're going to minus something as deduction, it is deductions under section 80C. Under section
Hmm.
80. First, understand the difference between deductions and exemptions.
Okay.
This exemptions is something which the business or the boss is giving us. जैसा bonus है या कुछ भी
No, no, no.
entertainment or
See,
right?
an employee can argue, okay, 20,000 that I received is not my income. He can say this. He said
Hmm.
my basic salary is only 10,000. This
Hmm.
20,000 is not my income. He gave me for the house
Hmm. Hmm.
because he wants me to stay close to the place of employment. So how could
Yeah.
you treat it as my income? Because if this 20,000 is not spent, I will not be able to earn this.
Yeah. Right.
So this is not my income. He can argue.
Hmm.
He can also say that if I do not spend on my medical, I will not remain fit to earn this. So you
Hmm.
cannot count this as my income, as this is the money that the employer has given to me so that I am able to serve him. Can we
Yeah.
say that, right?
Hmm.
Yes.
So the government says we very well know what is your income and what is not your income. Okay, you are just trying to act too smart and you're putting 10,000 in basic salary and rest all you're saying it's allowances.
Hmm.
So we are not going to treat entire allowances as gone from income. We will allow you to minus certain part and the balance. Acceptable amount we will accept. Balance should be added back to the income. So on
Hmm.
the allowance, what the government is allowing us to minus, it is called exemption. Are you with me?
Yes.
Then there is retirement benefits, which the employee will get. From that also government is allowing to minus something. Balance will be income. Then there are some perks. What is perks? We'll talk about later. After adding all these eight, I have gross salary chargeable to tax.
Hmm.
From that, there are certain deductions that are allowed. We will discuss about this. And then you have net salary chargeable to tax. I will pause for a moment. I want you to compare this, your gross total income chart, understand the difference between exemptions, deductions under section 16 and deductions under section 80, and then we will speak. So now I'm going to allowances. What is allowances? Allowances, amount given for. So what is allowances? Allowance is an amount that is given for expense. Okay? It should be monetary, given on a monthly basis, fixed amount. Fixed monetary amount given on a monthly basis for a particular expense is called allowance. So the very first allowance which an employer always gives an employee is dearness allowance. That means he's increasing the pay to match the inflation needs. This dearness allowance is fully taxable. Whether or not this dearness allowance is forming a part of retirement benefit or not forming a part of retirement benefit, amount that I have received to match the inflation needs is fully taxable. No exemption on this. They say your income has increased, income has risen, dearness allowance is fully taxable. I hope you're with me. Second
Any study होगा?
allowance, second allowance is house rent allowance, which is given under section 10. This is read as section 10, subsection 13A. So this is given under section 10, subsection 13A. So whatever money you receive from house rent allowance, there is an exemption under section 10, subsection 13A. So what is the exemption? Exemption is actual HRA received or 50% of your salary or 40% of the salary if it is other cities, or rent paid minus 10% of salary, whichever is lower. Miss, what are you saying? I do not understand. But before I go ahead, Zara, can you please read the amount exempted?
Uh, which one? Low
Huh.
HR,
The one in the yellow box.
HRA for 400 PM.
Mm-hmm. Read this.
अच्छा, actual HRA received or 50% of salary. Mumbai, Delhi, Kolkata, Chennai, other cities 40%.
Okay. If you are residing in Mumbai, Delhi, Kolkata, Madras, or Chennai, then you will get 50% of salary as exemption. If you're in other cities, then 40% of exemption. Or rent paid minus 10% of the salary. Whichever is lower, that amount is allowed as exemption. I'll go with one example to make things clear. Say your house rent allowance is 3 lakh. Are you with me?
Yeah.
Your basic salary is 5,000. I hope you're with me.
Hmm.
Okay, 5,000 into 12. Okay, 5,000 into 12. Your basic salary is 60,000. Now, what
Hmm.
is the amount that is allowed exempted under section 1013A? Actual HRA received. What is the actual HRA received? 3 lakh.
3 lakh.
Or 50% of the salary. So if you are from Mumbai, Delhi, Kolkata and Madras, 50% of the salary is how much? 30,000. If
One
you
lakh 50,000, no?
sorry,
1,50,000, no?
50% of salary. Salary is basic salary.
Okay, okay.
So 50% of salary is how much? 30,000.
30,000.
Or you say I am paying a rent of 1,50,000. You say this. So or I would say rent paid 1,50,000 minus 10% of the salary, that is 6,000. So this becomes 1,50,000 minus 6,000. 1,50,000 minus 6,000. So this becomes 1,44,000. So
Hmm.
what is allowed as exemption? 3 lakh or 30,000 or 144,000, whichever is lower. So what is lower?
30,000.
30,000. So 30,000 would be allowed as exemption under section 10, 13 A, and amount chargeable to tax would be 2,70,000. I'm pausing the video. I want you to analyze. There are some special switch off the video. There are special allowances that is exempt under section 10, 14, subsection 14, chapter 1. Okay? Special allowances which is for certain expenses. Okay? The amount of exemption under section 10, subsection 14, paragraph 1, not chapter 1. Paragraph 1 is amount of allowances or amount spent, whichever is lower. Amount of allowances or amount spent, whichever is lower. So this is for the expenses. You will remember it by cut HUD. Okay. C, conveyance allowance. Conveyance means traveling to your office to make it convenient for your employee to come to your office. But this allowance would be only from office to home and vice versa. Office to home, home to office. Office to home, home to office. Any other conveyance is not, you cannot include over here. Uniform allowance, tour, travel, or transfer allowance. You're sending him on a travel, you're giving him a free trip. Helper allowance, that means he's helping in the office to meet the official duty, so you give him helper allowance. Then there is academic pursuit allowance and some daily allowances. For these, the exemption is amount of allowance or amount spent, whichever is earlier. How do you identify it? You identify using this abbreviation cut HUD. I'm giving you time to digest. If you're watching the video, pause, memorize, understand, digest, and then go ahead.
Home.
So, this special allowance or expense allowance is under section. Allowance is given by the employer, but the exemption is under section 10, subsection 14, paragraph 1. And what is the amount of exemption? The amount that you receive from the employer or the amount spent, whichever is lower.
Hmm.
Okay. So first C is conveyance allowance. Conveyance means what?
Traveling.
Traveling from where to where?
Office to home.
Office to home.
Home to office.
Okay. Maybe office to the client place if you're sending him.
Yeah.
Even that would be there. Uniform allowance. Office uniform allowance.
Yeah.
Okay. You're sending your employee on tour. Helper allowance to meet official duties. Academic pursuit allowance and daily allowance.
Hmm.
Apart from this, under section 10, subsection 14, paragraph 2, there are exemptions that is given for transport allowance. Okay,
Hmm.
was over here was office to the client's place. Transport allowance is from office to home and vice versa. So this amount is fully taxable. No
Hmm.
exemption given. Okay. But
Hmm.
if the person who's working is a blind or a handicapped person, then you give a fixed amount of exemption, that is 3,200 per month.
Hmm.
Zara, is this part clear?
Hmm.
Okay. Then the other allowance that an employer can give an employee is the child education allowance.
Miss, this travel allowance is not already included in the first paragraph.
This is conveyance.
So travel is there in T, no?
Travel, transfer, tour. You're
Hmm.
sending the employee on a travel, business travel.
Okay, okay.
You're sending him on a tour.
Hmm.
This is transport from office to home.
Hmm.
Okay?
Okay.
So in this case, what will you do? Fully taxable, no
Hmm.
exemption given under section 10, subsection 14, paragraph 2. But if
Hmm.
the employee is blind or handicapped, then the amount of exemption is 3,200 per month.
Hmm.
Okay. Next is you give your employee some allowance to meet his children's education.
Hmm.
Amount that the Income Tax Act allows as exception under this section is 100 per month per child, but only up till 2 children. If children is more than 2, then nothing. So up till 2 children, 100 per month. So 100
Hmm.
to 12 into 2 children, 2,400 is allowed. But if you have only one child, then you can take only 1,200.
हाँ हाँ अच्छा ओके
Maximum you can take 2,400. Above that, nothing.
ओके
Exemption, okay? Employer
हम्म
can give any amount, but exemption is only this much.
हम्म
Hostel expense allowance. Suppose the employee is staying in the hostel and he's doing some expenses. No, the child of the employee is going for education and staying in the hostel,
हम्म
and the employer is paying for that for the employee's child.
हम्म
Exemption would be 300 per month per child, maximum up to 2 children.
हम्म
And some, if the employee is from a schedule area or special tribal schedule area, so the allowance that is given as exemption, allowance he's getting because he's from schedule area, the amount it is exempted is 200 per month. Okay, so I would stop over here for special allowances. I want you to read, record, learn. There are certain allowances that the employer gives an employee, but the Income Tax Act tells it is fully chargeable to tax. We are not going to give you any exemption for it. City compensation allowance, like if you're staying in the city, so the employer might give you some compensation because you're staying in the city. It is fully taxable, no exemption. Employer is giving some money to the employee to go and spend on entertainment. There is no exemption on this, but later on a deduction is given. Transport allowance fully taxable other than for disabled. We did over here transport allowance fully taxable other than for disabled. Telephone allowance, if the employer is giving money to pay the telephone bills, fully taxable. Employer is giving money, I am repeating the statement, giving money, okay, for medical, fully taxable. Employer is giving money for tiffin or food, fully taxable. Employer is giving some money to do a particular project, fully taxable. Dearness allowance, fully taxable. So these are some allowances for which there is no exemption under section 10. Then this entertainment allowance, it is fully taxable over here. That means when you write over here allowance, entertainment allowance, you will write fully taxable. But in this, you will get a deduction for entertainment allowance. What is the deduction? The deduction of entertainment allowance is only available first for government employees. If it is a non government employee, no deductions. Deduction is least of the following: actual amount received or 1/5 of the salary. At the time of calculating salary, you will take basic plus DA or 5,000, whichever is lower. So these are the allowances and the deductions that you'll need to know under while calculating income chargeable to tax under the head income from salary. I would advise you that you write all of this, memorize this, solve sums related to it before we go ahead on perquisites. So tomorrow when we meet, we are going to solve sums on this.